Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, and it's Wednesday, July 31st. Wow, summer's going by really fast here. But at least football season's upon us. So let's jump into these economic news releases scheduled for today. Like I said, this week we got some important news. Today's a real big one. So we'll start off with the ADP unemployment number for the month of July. And we had 198,000 new jobs created last month, June, and the forecast for this was supposed to taper down a little bit, down to 185, but it jumped up to 200,000. So obviously a very good number. These are the private sector that ADP comes out with. And then the next item, of course, is a biggie, is the GDP. This is for the second quarter. This is the first number that comes out. And remember, we had 3 revisions. The final one will come out in September. So we'll have this one, the initial one, and then another one and next month in August. And then September will be the final revision for Q2. So we had a 1.1 growth for the first quarter, and the projected for the forecast for starting out for the Q2 was 1%, but it came in at 1.7. So we'll see how well that sticks because remember we did have some higher ones for our first quarter, but real estate was pretty good in the second quarter, and then took a little bit of a dive, so to speak, in the third quarter. So second quarter could be still a decent number in there. Let's also take a look at the employment cost index for the Q2. So this is the cost of having employment. So we had a 0.5% increase for Q1, and then they figured it tapered down a little bit for Q2 at 0.4, and it stayed the same. So it cost went up a little bit, about 0.5%. Not a huge deal. It came in where our forecast came at. And then we also have the Chicago PMI. This is the manufacturing in the Chicago region for the month of July, and anything above 50 is considered expansion. So obviously 51.6 is just barely above expansion, just up there. And forecast was to be a little bit more improved at 54. It didn't improve, but not nearly as much as the forecast came in. So a little disappointing there, but again, did show in the right trail of improvement at 52.3. And last but not least, we got the Fed announcement today at 11:15 Pacific Standard Time. The Fed, as I mentioned yesterday, they had a 2-day meeting here, and so all eyes and ears will be on the Fed at 11:15 when Bernanke gives his announcement as to if there's any changes. Because remember, they've been talking about QE tapering, and a lot of people are kind of predicting this is going to start happening in September. So they're looking for any clues if this is going to start happening, especially with the numbers that came out today with the ADP numbers and stuff. Once today's over, Friday will be a big day with the jobs numbers when the Bureau of Labor Statistics comes out with their numbers. So we'll jump over to the headline news here, and basically, the economic news release were the main items to date, but the stock market's up. They're liking the items on there, and once the Fed comes out and speaks, obviously there could be volatility in there. There's going to be a lot of volatility in there, and it could dramatically change one way or the other. So stock market take off even further if they like what they hear, or it could drop, or whatnot. So maybe they could even come in and since stock market's up, they may even cash in and take in their profits as well. That could always happen. Now let's take a look at the bonds, and the bond market is worse off today. What happens, even though you see 19 basis points up, but if you look at where we started at, we started out down near the 100 level. So we have this huge opening gap that worsened. So we left off at 100.56, and we were basically at 100.09 today. We started off nearly 100 right at the plateau there. So not a good sign right there, and we even dipped. So we did pretty much almost touch the 100-day moving level. Now hopefully we'll be able to close this and get within that same trading range in there. As you can see, we're testing the floor there, and we'll need to try to get up above there. So if you look here, we did test this 2 times, and on the 3rd time it went down. So this could easily start going downwards. We could have a downward trend line moving here, and we have to be careful. But after the Fed, after today, we'll have to kind of wait and see what things could bring to us if we start a trend line going upwards, or are we going to start going down again? All right, but rates are higher today as a result. So stay tuned. We'll have to kind of wait and see. Have a wonderful day. Thanks for watching, and we will see you guys tomorrow.